Good evening, fellow traders. Today is Tuesday, December 13th, 4:24 p.m. Central Time. Markets are now closed. Are you convinced now? I've been saying that the markets already knew the answer to today's CPI. And I've been saying that since last week or so. And today I'm going to show you the 3 hints the markets gave yesterday that proves it knew the answer. Okay? What you're looking at on the screen, besides Mr. Albert Einstein, is the MACD and the RSI. Well, here's the MACD and RSI down here. But as you see what the markets did in pre-markets beforehand, we'll get into that in a little bit more details. Everyone knows the inflation rates were down month over month now. Okay, that looks like the beginning of a trend. I'm also going to show you and prove to you that the VIX was bluffing all along. And I called its bluff ever since last week. Okay? The dollar, I'm going to show you that also. It's done, guys. Yesterday I was unable to make that call because it was too much right on the line. It's done now. And I'm going to show you charts on that as well. And we're going to get into the intraday charts for SPY, S&P 500. And you are not going to want to miss that section because it is setting up, the formation is setting up for the grand finale of 2022 tomorrow in FOMC. I'm not joking. The EMA and SMA lines from different time frames are all converging like an arrow tip. And I'm going to show that to you, okay? But before we get into all that, I'm going to tell you a very, very brief bedtime story. It's called The 6 Bears and the Bull. In YouTube land, we have at least 6 YouTube bears right here on your screen. And they all were commiserating in the forest together. One of them was saying, "We're going to crash." The other one is saying, fellow bears, there's nothing to fear as long as the bearish signals remain." Yet the other one says, "It's risk off." Another one piles on and says, "Guys, we are tipping over." But yet the other one also says, "VIX was up 9.5% yesterday. It is on." Right? So as they're all commiserating near the campfire, up the trail a piece walks a lonely bull. And as he approaches the fire campsite, he tells the bears, "I bring word from the markets that it's not over until it's over." Okay, so enough of the bedtime stories. I was talking about VIX earlier, and this particular bear made reference to VIX being up 9.5% yesterday, which is true, factually correct. Last week, I did a video. I said, "Is the VIX bluffing?" And this video was on the day that VIX gapped up from being down to the 19.06 level. Okay? And we're going to get into the VIX actually on the next slide. So I won't talk about too much more than that other than mention it. So, to this YouTube bear who said, "Who's lying, VIX or SPY?" This was last night. Well, I think we have an answer. That's VIX today, down 9.80. VIX was lying because VIX was bluffing all along. Okay? Last night, here's a screenshot of the video when I said, "To me, it's an open question. I see weakness here. I don't see strength." This is talking about the VIX, right? It's hard to see, but trust me, it's the VIX. Where I called out the bearish divergence on the hourly, MACD was going down, and while the VIX was going up 9.6% to be exact. And it's kind of hard to see, but these arrows are all the gap ups that I showed last night. All the gap ups that resulted in failure. Okay, so that was my observation last night. I see weakness here. I don't see strength. That was despite the VIX being up 9.6% last night because there were two gap ups that it had. Remember that in the video that I showed? So to me, VIX was cheating fate. It was buying time. And I think the market makers knew it. So if they took their last chance to prop up the VIX as much as they could, gap up two times, because they knew VIX didn't have the strength. And I saw that last night too. Okay? Well, so based on my weakness comment, I don't see strength. How did I do? Here is what the VIX did today. See? Last night. Boom. Now, we're going to get into it a little bit more, but as you'll see, this is the 1 hour and this is the 4 hour. Okay? Now, let me zoom in because this is actually quite important an observation. You see this right here? This is the 4 hour chart. The red MACD has now crossed down under the green signal line on the 4 hour chart for VIX. Let's go back and look at history every time it does that. Right here, starting here. Crossover. Down, 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 down. Up, crossover. How'd that work out for you? Okay? Down, 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 down. Come up, cross back over. You're going down. So, the VIX has now crossed over. Here's your two gap ups. That's what when I did that first video, is the VIX bluffing? I did it on this day. I said, no, something's not right. You're so weak. Then you gap up, and now you need another gap up because you're so weak. And ultimately, the house of cards falls. And now, the 4 hour time frame, MACD, is weak. So, VIX was bluffing the whole time. The whole time. Okay? Look at the RSI now. Oof. Looking pretty rough there, buddy. On the 4 hour chart. 1 hour chart. Okay, so this is going to be the open question now. Here's the 1 hour MACD. Did you see that? Where does it go down relative to this low right here? How far is it going to keep on going down? Tomorrow's FOMC obviously will be the answer. It will be the answer. If this could be, tomorrow's FOMC could literally be the knockout blow for VIX and the dollar for the remainder of 2022. It's come down to this. Okay? All right. Now, here's the VIX 5-minute chart. Check this out. This is today. Here's where that's why I was like, it looks weak. It just looks weak. And these two circles right here prove it. Here and here. So, as you know, so on the left-hand side, VIX would have fallen, and then here's where it's coming up. Here's what I recommend you guys always do. When doesn't matter what security you are trading. It does not matter one bit. It doesn't matter if it's SPY, an ETF, a stock. Does not matter. You should always focus instead intraday on the VIX. Don't focus on your security. Focus on the VIX. Here's why. Because the markets were able to retrace a lot of the gains today because the VIX was able to temporarily clear its EMA 50 line on the 5-minute chart. Right here. Right here. See that? See how it beautifully clears it? But ultimately, its weak hand came through. And this circle right here, this candle that closed firmly below the EMA 50 on the 5-minute chart for VIX, that tipped your hand that actually you're weak. You're bluffing. You're bluffing. And those two gap ups, ever since December 5th, it's just the market makers propping up a weak VIX. Because when you can't prop them up anymore, like today, you can't hold your EMA 50 line on the 5-minute chart. And as you guys have heard me on previous videos say, it always starts with a 5-minute chart. Always, 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 always. If you can't even hold your EMA 50 line on your 5-minute chart, you can forget about it on the 30-minute, the 1 hour, the 2 hour, the 4 hour, the 1 day, the 1 week. You can forget it. Forget about it. Okay? Just cement that in your mind. That is rule number 1. You must be able to hold your EMA 50 starting from the 5-minute chart. If you cannot do it, you do not have a trend change. The way the markets were able to cheat since December 5th, the VIX, is gap up, gap up. But all the while, the VIX was weak. That's why I was like, nah, something doesn't look right here. So it proved it today. VIX finally showed its hand. It was weak. It was weak. Okay? So that you closed a candle below the EMA 50 line, or you closed a red candle straddling the line. That's, to me, both of them are definitions of failures. Okay? So failure point number 1, proving it's weak. Tries to come back up. Oh, it failed again. See that? Failure point right here. Actually, I should have circled that too, but I didn't. Failure point number 2. It's trying one more time. Oh, come on. Oh, failed again. 3 failure points. 1, 2, and 3. And now look. Good night. That's how it closed. You do not have a trend change. Now, this in the morning. Okay, yeah, right here. Okay, you came up, back tested above the EMA 50. Now that I consider a trend change. Like ooh, see, and it kept going up. But on its back test, it fails right there. But right, like here and here, so 2 points were passes. They were passing. I was like, oh man, watch out. When I saw this big green candle, I'm like, ooh wee. But that was, upon reflection, when I show you SPY's chart intraday, now you're gonna know why. You're gonna know why. You're gonna know why. You're gonna see why. These big green candle, big green candle, big green candle. You're gonna see why. I know exactly why. I'm just gonna hint to you right now. It's because we damn near held the line on the weekly EMA 50 that we have been unable to hold for all of 2022 to date. Okay? That's why. This is why the VIX said, not right now, buddy. That's why the VIX did this. Big green, big green. You'll see why it a little bit later, okay? So, I just want to mention that for now. Okay? So, US dollar. Oh boy. All right. Weekly chart right here. Look at that big red candle, and now it's under the EMA 50 line. Remember yesterday when I couldn't make the call? I'm like, I can't tell you if it's weak or strong. Now we know. It's under it. Okay? Now let's skip over to the 4-hour chart right here. So check this out. 4-hour chart. Now you have separation. See, yesterday was right there. I couldn't tell. I'm like, ooh. I can't tell. Now we know. You have separation now, and you're under the 0 line. It's going to get worse. It's going to start separating even worse. See what I mean? It's going to look like this. This is a 4-hour chart. You can't reverse a 4-hour trend that easily, guys. No, 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 no. A 4 hour, that's a half day, right? That's a half day. You can't just reverse it like that unless Jay Powell comes out tomorrow. Unlikely. He comes out and says, yeah, we're actually going to increase it by 100 basis points. I'm not sure how he justifies that when core CPI and year over year, month over month was down today. So no, there's no way. Okay, there's no way. It's impossible. He's crazy if he does. Okay, so look at the 4 hour. Bad. The dollar is done. Under the zero line and now separating from the signal line. It is done. I hear other stocks channels saying, well, the dollar might rebound. No, it's not. No, it's not. It's done. Okay? Look at the RSI. Ugh. Back when it's up here and it's kind of doing good, sitting pretty. Not so much. It's done. Okay? Remember yesterday, though, I did comment. I said, man, this looks like a lower high than this, and that's a lower high than that. See, I commented that, but I was like, that's all I can say. Now we know. This was the high, and now it's going down. See what I mean? Okay, so 1 hour chart, more of the same story. It's just not looking good, guys. Now you're below the zero line, big time. I mean, the 4 hours below the zero line. We're done here, guys. That's a wrap. Okay? Now I'm going to get into hint number 1 of 3. There are 3 hints that it gave yesterday. 3 hints. Okay? Here's hint number 1. That the markets already knew the answer and that they were positioning themselves yesterday. Right? They're positioning themselves. That's always been my position. They were positioning themselves ahead of time because they already knew the answer. Hint number 1. Hold on a second. Okay. As of last Wednesday, Thursday, Friday, Monday yesterday, Tuesday today, you've made consecutive higher highs. But the big hint was yesterday, Monday's close, 398.91 SPY, by the way, was higher than Friday's high, 398.70. That's a huge hint because it's trying to keep to the higher, high, higher, high, higher, high. See that? Now you see? That's hint number 1. Consecutive higher highs. Okay? Hint number 2. Remember last night, yesterday's video, I said, you guys, so we better have something like this. When I penciled in the word flat, stock futures flat ahead of key inflation data on deck. Something like that, right? Remember that? Well, how did I do? When I took yesterday's headline at close yesterday on CNBC, oh, look at that. Stock futures are flat as investors await key November inflation report. Okay? That's hint number 2. What it ended up doing, actually I'll show you this on the next slide. The flat I was going for is I want to see consolidation. I need to see you got to take a break, guys. You can't just keep going up. You got to consolidate. Right? You were already up all day. You got to consolidate. That was the idea. Why I was going with the flat theme. Okay. Hint number 3. RSI. Oh, sorry. RSI. MACD. No bearish divergence last night. That was the first thing I looked at when I woke up this morning, early in the morning. And I looked at futures, I'm like, holy moly, what the... And then I said, whoa, boy, what's the MACD and RSI doing? Fortunately, I saw no divergence. There was no divergence. MACD and RSI was moving in the same direction as price. Here's an example of divergence, the blue arrows. Price goes up, MACD goes down. What happens to price after that? Uh-oh. That's what I was worried about. That's the first thing I saw. But when I saw her in the early morning, As I woke up, checked my phone, and I saw no divergence. I'm like, whew, wow, this could be legit after all. Okay? So, let's review the 3 hints again. Consecutive up days leading up to yesterday. Flattening. Flat right here. It was flat. It was flattening. Flat futures. See, RSI came back down, kind of reset itself, only to start to go back up. No divergence. No divergence on the MACD and RSI. Those are the 3 hints. I said, this is not a bull trap. We closed today higher low, right? Did we close in a positive? I have to check. I think so. Yeah. Just modest. Dow 103. Yeah, it was just an okay day for overall. Okay? Okay. We are now about to get into intraday, guys. You get ready for what I'm about to show you. Okay. SPY. 5-minute, 30-minute, 65-minute chart. Okay? Look like you'll be like, what is all this mess? Let me just get to the end, and then I'll go backwards in details. For tomorrow's FOMC, the price is now. The SPY is now in the last half. We'll just say the last half of the day. The first half was the morning. Last half was in the last half of the day. SPY was trading in a range that was bound support and resistance by the EMA and SMA lines across different time frames. They are all converging into like a point of an arrow now. It's crazy. Okay? For example, this red line right here, that's the weekly EMA 50 that I was talking about last Friday. Or it was last Friday. This is the weekly EMA 50, guys, that the whole markets have not been able to claim in all of 2022. So what happened was, when we surged up way above the weekly EMA 50, only to come down, try to backtest on it, come up, but failed. I think it failed only because it's like, you're a day early, but you need to wait till FOMC. So that's why it ended up in this range. So this first red line is the weekly EMA 50. This gray line just below it is the 30-minute SMA 20, right here. See that? Right here. Gray line, right there. It touched it, kissed it perfectly. It kissed it right there. Okay? This red line down here, the support line, is the 30-minute EMA 50. Right there. Right there. See that? It kissed it. That was the support line for the day. The 30-minute EMA 50 was the support line for the day. Okay? This gray line underneath the 30-minute EMA 50 is the 65-minute SMA 20. It actually went down below the 30-minute EMA 50 and kissed the 65-minute SMA 20 and came back up. Here's the 65-minute SMA 20 right here. Okay? It would have been right here. That's where it wicked down. It wicked down but came back up. What I'm saying is the markets always will find support at the EMA 50 or the SMA 20 at one or more of the different time frames. So that's what I recommend that you guys track to. You don't have to memorize numbers over here, because numbers mean nothing, because they're always tracking to one of the EMA or SMA lines in one or more of the time frames. I hope that's clear. Okay? You don't have to memorize numbers. You just look at where are the lines, and then find the number that corresponds to the line. Then you say, oh, I see where you're going. Because that's exactly what I do. When I see prices move up or down, doesn't matter. I start at 30, 65, 130, 195, 240, daily, weekly. If the price is going up like this, that I start going up the time frames. I'm like, where are you going? Where are you going? See what I mean? You're headed somewhere. Where are you going? So that's what I do. Or if it's going down, it's the same thing. When you're coming back down, you're like, oh, I see why you're trying to find support right here. Right? Because it aligns perfectly with the 30-minute EMA 50 right there. Right? So that's why I keep these views up. I keep them up so I can see, like, oh, I see what you're trying to do. I see why you're bouncing off this particular level. We'll just call it 400. Right? I'll just make it easy. 399.92. Okay, fine. 400. It bounced off 400, but not 398, 396, 394. You see what I mean? If it failed 400, the next stop would have been likely 398 and some change. It would have been at the 65-minute EMA 50. Okay? I hope that makes sense, guys. Okay. This is the MACD. This is how I knew it found the bottom, because the MACD started to curl back up and cross. Okay? That's how I knew. That's how you know. Or if this is the 5-minute chart, or if the MACD 5-minute creates a higher low notch, oh yeah, that's good stuff. That's the bottom. That's how I knew that was the bottom. Okay? Plus, you can start to see, you're going to have to wait on this one though. You start to see it wick up, go up, wick up, wick up, wick up, wick up. See that? Wick up, wick up, wick up. That's buying pressure, guys. See what I mean? It's like, they're not going to let this one crash. Okay? So, MACD 30-minute chart. Above zero. See? Came up, came down, 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 but it's still above zero. Still above zero on the 1-hour chart, 65-minute chart. Okay? So, now, 80% of the time, you can stay within the 5, 30, and 65-minute time frame. 5, 30, 65. 20% of the time, this is when prices are moving fast. 20% of the time, you can go to the 130, 195, 240 daily, weekly. Okay? What I'm going to show you on the next slide is actually... Okay, so VIX, as you just saw earlier, it can't even hold its 5-minute chart, right? Can't even do it. You can't even hold the 5-minute EMA. That's case closed. You're weak. You want me to show you where SPY is currently tracking to? I'll give you a hint. It's daily. You can skip 130, 195, 240. I'm going to show you in this next slide. It's tracking to the daily. I was like, wow. Okay? All right. So, here's the daily right here. Here's the daily right here. Yeah, here's the daily. Look at that. That's today. SMA 20 line on the daily. I had to go up to the daily to find out, well, where are you bouncing? Or like, what line are you bouncing off of? See, that, my friends, is power. Okay? That's power. So you saw here, big old wick, because that's what I showed you in the intraday earlier. We went way above the weekly. Here's the weekly SMA 20 line that it has all of 2022 failed to recapture. So we went way above it, but we did come back down. That's okay. But you saw that on the previous slide, all of that convergence, all those different time frames, they are now coming together like an arrow tip exactly for tomorrow. The markets planned this perfectly to form in this formation the day before FOMC. This was in their plan all along. It was just a matter of trying to figure out, well, what the heck's going on here? You see what I mean? This is it. This is the tomorrow FOMC 2 o'clock when they release the number of the rate hike. We expect to be 50, but 2:30. That's when the fireworks are really going to fly. So get ready, guys. It's coming. It's the grand finale for 2022. The bull rally grand finale starts tomorrow. Okay? It starts tomorrow. And you guys probably figured out that this morning I totally botched that scheduled 7:20 a.m. CPI commentary. But I think I'll have it figured out for tomorrow. If you want to join me, I plan on starting it a little bit early, right? In case I kind of fumble around with it again, right? I don't want that to happen, but so if you'd like to join me tomorrow, please do. I'm gonna be. That's gonna be interesting. I'll provide some commentary before then, like what does the MACD look like heading up to it, right? Like, does it look strong? Does it look weak? What? I want to see how the markets are positioning themselves, right? So I may not do a video in the morning because what matters more is the intraday data leading up to the FOMC, right? The 2 p.m. The stuff in the morning, you need to let that play out. I need to see the MACD and the RSI and all that kind of stuff play itself out leading right up to 2 p.m. So I may not do tomorrow morning's video outlook because it's not going to be that informational, honestly. All I'm going to say is, well, we need to see what happens today. We need to see some follow through, you know. It ain't going to crash in the morning, trust me. No way. You saw all those convergences, all those EMA, SMA lines just coming together. No. It's not going to crash in the morning. That much I can say. But I don't think we're going to rally either, right? We're going to be in that tight range. We're going to be in a tight range. So you can expect futures tonight probably just be flat, right? I think so. No. They're not going to just take it out of our hands in overnight futures tonight. Oh, we're just going to rally and we'll be way above the weekly EMA line before tomorrow. No. Actually, if that happens, that's a bad sign. So, okay. If you'd like to follow me on Twitter where I have real-time updates, please do so. And give it a like, share, subscribe, and click to be notified if you'd like more of my content. And with that, I am Agent 000 signing off.